so that you can reference it back if needed. But again, thank you so much for joining us. We want to keep this really short and sweet. Ana and I are always brainstorming about how we can bring our clients just the most value, the most education, so that when you guys are actually writing that offer, purchasing that new home, you're going to feel confident about it. That's really our goal all throughout the year. So this was just a way that we figured we could get everyone together, even just for a half hour to check in. We will open up for questions at the end, so feel free to either put them in the chat box or just wait till the end and we can ask them. But quick introductions, you should know at least either one of us if you're on this call, but just as a reminder, my name's Cindy Plourde. I'm the San Diego Realtor side of this, so helping you shop and purchase that home. I specialize with first-time home buyers all over San Diego County.
Yes, and my name's Ana. I am a mortgage lender here in San Diego. I'm licensed in California, so I actually work with clients and transactions throughout the state, but my home is here in San Diego. But yeah, I'm a mortgage lender.
Awesome. So she's the money, I'm the shopping, pretty much.
You're the fun part.
So diving in, just wanted to really start with this. Is it a good time to buy? Because I know that the media is constantly trying to pin, is it good or bad? Or, just really paint it as black and white. And if you spent the holidays with family, who knows, maybe this came up at your kitchen table. Somebody had to weigh in. Everyone likes to have an opinion on the housing market and think that they're an economist, right? But from my perspective, I really like to keep things simple and to the point, especially because I work with first-time home buyers. So when you hear things about like fear and are things good or are they bad, and the people that got burned in the crash, a lot of that is geared more towards investors, people that are trying to make a quick buck, either flipping homes or people that have homes that they need to sell and then are going to be buying again. But for the majority of people on this call, if not everybody, is a first-time home buyer. So looking at it from that perspective, I have this graph on the screen. Now, this is nationwide, but I love what it represents. It represents the median sales price of houses in the United States, starting at, 1950 or so, up until 2020. And now the housing market is what it is. It's a market, right? So just like any financial market, there's going to be little peaks and valleys. But when you really zoom out and look at this graph of what has happened since essentially, even before a lot of us were born, 1950 to now, you can see that buying a home is an appreciating asset over time. And this just, when I saw this graph, like the beginning of my real estate career, I felt really confident. I'm like, wow, okay, what I am telling people they should invest in real estate, this makes sense. Look at this graph. It just is in an upward trajectory. And even, we talk about the worst case scenario. Everyone wants to talk about the worst case housing crash. Those that were hurt during that time, you can kind of see this little bit thicker of a gray column going through right before 2010. This is that massive, awful, terrible housing crash that happened. And while, yes, investors and things like that got burned, people that were buying their home for their primary investment, as long as they held on to that home for about 5 or so years, that's when things came right back up to the amount that they bought it for, the value that they bought it for. And if you bought a home in 2008 and you still own it today, you are all the way to the right of the screen up at the top, right? And so I just wanted to give a zoomed out version of that because it really can get, oh my gosh, is this a good thing? Is this a bad thing? A lot of fear mongering going on, but pointing at this graph, you can see that buying a home when you're a first time home buyer, it's going to appreciate over time. And just for fun, I put in a picture of times that the headlines were even wrong about the housing market. So, at the end of the day, truly none of us know exactly what's going to happen. But historically speaking, looking at this chart, I feel like can give you the confidence when you are buying your first home that this is a good decision.
Yeah, and I do want to add to that. So, as far as now being a good time to buy, it's actually a really unique opportunity to buy. We're starting to see the market shift. So, rates were at the record low when COVID hit, and now they've gone up a little bit. So, we're seeing a lot less buyers on there, which means less competition. And we're starting to see sellers willing and able to negotiate those seller credits and those price reductions, which we'll touch on later in the presentation. And I do want to touch on the term that we say here in the real estate industry is date the rate and marry the home.
Mhm.
So people hear 30-year fixed, they assume they're locked in for 30 years. But in fact, 70% of homeowners actually refinance, sell, or pull out cash within 5 years of purchasing a home. So your interest rate is temporary. You can refinance within 6 months of your purchase as soon as rates go back down.
Awesome. Thank you. Okay, so then comparing renting versus buying. Most of us are in the position that we're currently a renter, and both Anna and I were not naive to the fact that when you're comparing what the average San Diego rental, what that monthly payment is versus the payment of a homeowner, the homeowner payment is going to be larger. We know that. So I know that when you're comparing what you're paying for rent now, and when you get that pre-approval and you're starting to look at that monthly payment, it may at first be off-putting to say, whoa, that's a little bit more than what I'm paying. Is this really the right financial move for me? Of course, you need to be able to afford the payment of the homeowner. But in terms of how they compare, and while it may look a little bit, you have that sticker shock, right? You have that sticker shock with the home ownership, but when you break it down, it's so much deeper, and in reality the long-term wealth implications are there. So comparing side by side those things, in 2021 the average San Diego renter spent $36,000 on rent. I took the average rent price of, I believe, like $2,500 or $2,800 times 12 months versus the average homeowner. And I think this stat is even just nationwide, so San Diego is probably a little bit more. The average homeowner earned $106,000 on their home. So that's talking about the equity. That's talking about when you purchase a home and just the market value has gone up from when you bought it. Now, that's not what we plan to see on every year. Typically, equity goes up about 3 to 5% every year. That's what we expect. In these last couple of years, we were seeing 15 to 20% every year. So it's definitely not, I'm not trying to say that you're going to make $106,000 on your home every year once you get in, but just showing that that is the opportunity here. And that is when you're comparing, okay, my mortgage is going to be a little bit more than my rent, but why you're investing in it is so that that is a potential situation for you, that you can earn money. Whereas with rent, we know it's just going out and it's never coming back in. And then when it comes to, payment increases, right? So in San Diego, rent payments can increase up to 10% each year, right? We definitely saw a lot of that happening last year. The market value for homes went up, and just as your rent should go up, it definitely did. And we don't see any signs of that coming down at all, as San Diego is a super desirable area to live in. It's easier to get into a rental necessarily. So we don't see any of that going down. We see rent continuing to increase. Whereas when you are a homeowner, you are locking in that fixed payment. Anna, I don't know if you want to take a second to touch on that.
Yeah, so when you're a homeowner, you're going to be locked into that fixed payment. There are certain interest rates that are adjustable, but that fixed payment, it's not going to change, so you can budget properly.
Mm-hmm.
If you want to move to the next slide too, we can talk about the affordability. Perfect. Let's see. Do you want to start with the asking the seller to pay for costs? Perfect.
Absolutely. Okay. So, talked about that. All right. You get pre-approved. You now have your number. You've talked about interest rate programs with Anna, but this is how, we're going forward. But even once you have that information, there are additional ways that we can even hopefully lower that monthly payment while we're in the negotiations with the seller. And that's where I definitely step in and earn my duties as a real estate agent, is to be able to negotiate on your behalf. And what we are seeing right now with the, slower buyer demand, All of this did not exist for the last 2 years. It was a bloodbath. You had to put your best foot forward. And now we're able to see these opportunities where we can ask the seller to pay for things like your closing costs. And that is tens of thousands of dollars potentially that you don't have to take out of your savings to put towards the home. So in the right scenario, we can say, hey, can you cover this for my buyer so that they buy your home? We're seeing a lot of that right now. You can also ask them to repair things that come up in our inspection report once we're under contract. And they may also pay for something like a home warranty. So even just more ways that we can ask the seller to help you out as a first-time home buyer so that either that monthly payment is lower or just even what you're coming out of pocket to purchase the home is lower.
Perfect. Yeah. And then for that second bullet point, the minimum down payment requirements, if you can just hop to the next slide. So a conventional loan is a very typical first-time home buyer loan. It actually requires as little as 3% down. So as you can see, for example, a $500,000 house would cost about $15,000 down payment. It's more common to see borrowers put down 5 to 10%, but if down payment is the only thing that's holding you back, there is that 3% down option. I know that anything less than 20% down payment does require mortgage insurance, and the price of mortgage insurance really does vary, and it depends on your credit score and your down payment. So I've seen it as little as $30 a month, and as much as $400 or more a month. But I'd say as long as your credit score is good, it won't likely make or break your payment, and it will drop off once you've paid off 20% of that loan. One thing you do want to budget for, it's not just $15,000 out the door. You do have closing costs. Those are going to be prepaid taxes and insurance and any fees associated with getting a mortgage. And those are roughly about, I'd say, $10,000, give or take. So budget that on top of whatever your down payment is.
Mm-hmm.
Next, I want to talk about the 2-1 buy down, some of the options for purchasing now in this unique market. But first, I kind of want to go over Mortgage Coach. So if you can hop to the Mortgage Coach slide. Perfect. Thank you. So this is a snippet of a Mortgage Coach presentation. I create a personalized one of these for each of my clients, and it's catered to their purchase price. What it does is it basically breaks down all of the fees associated with a mortgage. So your costs, your prepaids, your interest, your tax savings, your taxes, your monthly payment. It's all here in an easy to digest and understand presentation. So I'm more than happy to create these for any of you. If you'd like, just reach out to me at the end of the presentation. But this one in particular, I created for the 2-1 buy down. So that's what it's showing here. As you see at the top, there's option 1, option 2, and option 3. Option 1, this is all for an $800,000 purchase price with 10% down. So option 1, that's just if you were to pay that $800,000 sticker price, put down 10%. As you can see in the second highlighted row, your payment's about $5,370 a month. That's including everything. So that's principal, interest, taxes, and insurance. Option 2, let's say right now is a good time to offer a little bit less. So let's say you want to put down $15,000 less. So that's $785 purchase price. As you can see, the payment goes down about $100 a month. So not too big of a difference. And then option 3 is what we're talking about, the 2-1 buy down. So it's a temporary buy down. So what it is instead of the seller, or instead of lowering the purchase price by $15,000, you're actually asking the seller to do a $15,000 seller credit to temporarily buy down that interest rate. So instead of the 6% rate, you're going to get a 4% rate. And as you can see, the payment is almost $1,000 less with that particular option. So there's a lot of different ways where you can hack the affordability, and the temporary buy down is one of them. It is temporary, so it's only going to be for 2 years. But like I said earlier, interest rates are temporary, so you can just refinance as soon as rates drop again.
Yeah. And guys, yeah, this is what's really cool about the 2-1 buy down is that for the seller, there's no difference for them. If you're offering $15,000 less on the price of the home versus you getting a $15,000 credit, which essentially you could either use it towards closing costs or buying down the interest rate, but I see it more as like cash option. It's no different for the seller. It's just going to be what they net at the end of the day once they've sold their home, paid off their loan, and done whatever closing costs that they have. Whereas for you, it can make a huge difference, right? Because you're either just deducting $15,000 from your entire loan, which is, dependent on your purchase price, but in San Diego, that's really not that much on your loan. Whereas me negotiating on your behalf to the seller saying, hey, let's get a credit for this instead. And again, either apply it to closing costs, so it's cash that you don't have to pull out, or temporarily buying down your interest rate so that you are now, at what, 4% or something like that. Because I think interest rates right now are hovering around 6% or so.
Yeah, right around that 6% mark, give or take
Yeah.
for the day, because it's just so versatile right now.
Yeah, absolutely. So I mean, again, there's mortgage calculators online, things like that. And you guys are welcome to play around with tools that you find online, but don't forget that coming to us and saying, hey, what are my options? What are these like hypothetical scenarios that absolutely could be reality when we go home shopping, and start to figure that out. So, just because a mortgage calculator is showing a monthly payment that you're not comfortable with, like, don't exit out. Come to us, the professionals that actually have your file, and see what you can qualify for based on your credit score, based on your income. All of that comes together to create this special formula. And this mortgage coach is one of the reasons that I love partnering with Ana for my clients, is because I love how visual it is. When you're dealing with all these numbers and all these options, you're like kind of lost in it all. She can even run this for you if you're just weighing your down payment amounts. If you are like, if you're trying to decide, should I put 5% down? Should I put 10% down or 20? What does that look like? That even simple breakdown can be really helpful to determine how you want to proceed with that.
Exactly. And it's helpful too if you're looking at, maybe you don't know, you're checking out homes worth $700,000, but then you see the payment and maybe you can afford a little bit more. So you can compare what a maybe $650,000 home with a $400 HOA versus a $1 million single family home. So you can kind of see the price differences there. So it's really great for numerous reasons. One last thing I want to mention is that third highlighted row. That's your tax benefit. So a lot of people don't know this, but there are major tax incentives for homeowners. You can actually write off your interest and get reimbursed at the end of the tax year. So this is just an example of what your refund might look like. So that's $820 monthly that you'll be saving in taxes just from buying a home. So if you factor that into that monthly payment, it does, significantly save you some money there. So there's huge tax savings. I don't think people stress that enough, but for purchasing a home.
No, absolutely not. It's almost like once you do this mortgage coach, you should almost mentally or in some sort of formula take that into account to be like, okay, maybe you are saving that money at the end of the year. So monthly, maybe your payment actually is closer to what you could get for rent, more so than you think. So that is great. And going back to the mortgage calculator thing, another thing I want to make clear is that, because I've played around with them online with myself, whatever, they default for whatever reason to like $300 a month for private mortgage insurance. And like Ana said, that's just simply not the case. It ranges for everybody, but I don't know if you have like an average of what you see for like a solid first time home buyer. I think for myself, like when we went through some numbers, it was like $90 a month, which felt really doable.
Yeah, I think probably right around like $100 or less, like 80 to 100 is pretty common. Like I said, if you have a really bad credit score, then it's probably going to be a lot more than that. But then we can visit doing an FHA loan versus a conventional loan, and FHA has a fixed mortgage rate. So like I said, there's so many different options out there for you. But yeah, mortgage insurance, people hear that and they're like, oh, it's a waste of money. But in reality, it's not going to make or break you. It's going to get you into a home. And what is that extra, $80 a month when you're living in a dream home that you own and you can renovate and all the fun things that come with home ownership?
Absolutely. Yeah. And I think there's no math equation, especially when we're talking about buying a home in California, of the amount of time it would probably take you to save up 20% of a down payment. that we're talking most likely six figures, as opposed to, okay, getting in now with a 5% down payment, even as low as a 3% down payment. And again, that PMI will drop off once you hit, what is it, 21% or 20%?
It's actually 19%.
There you go, even sooner.
18, 19, yeah.
Okay. If you guys have any questions about the mortgage coach or about PMI or about, the 2-1 buy down, that's definitely something that's really being talked about in the industry right now that a lot of people are taking advantage of. So please let us know. Or of course, you can reach out to us and talk to Ana one-on-one about your scenario. That's probably the easiest, so that she can paint everything out for you in Mortgage Coach. All right. Anything else on hacking affordability, or did we cover it all?
That was all I had to say, unless there's any questions. But yeah, just know that there's so many different programs out there. If your issue is your down payment, there's 3% down options. If your issue is your monthly payment, there's a temporary buy down or paying points to lower your interest rate. So there's definitely options out there to help suit whatever situation you're in.
Awesome. All right. So then finally, just wanting to remind you guys the timeline of wanting to get into home ownership, right? So some of you have different timelines of, when you want to be buying a home, but wanting to remind you, you probably want to give yourself about 3 to 4 months. Everybody's a little bit different. Everyone's going to make their home buying decisions a little bit differently. Some people are ready to go. They're comfortable putting in an offer that first weekend we go out shopping. And some people want to shop a little bit more leisurely for about 2 months and going to see homes and everything. And either situation is totally fine. I just want to make sure that you're giving yourself enough time realistically for when you are thinking about being in your new home, backing that up and figuring out, okay, when do I need to start seriously looking? And if we've done a buyer consult together, I've probably mentioned it's never too early to start digitally really paying attention and digitally shopping, so that you start to get comfortable with, okay, this is what $800,000 gets me in Claremont, or this, that kind of thing. So that when we are standing in a house, you and I are both kind of like, we haven't seen this yet come on the market, or, this is something really special. Maybe we should act on this. But just kind of overviewing again from beginning to end of what this could look like. It could be expedited, it could be longer, but for the most part, what we see is, that first step, it starts with getting your pre-approval. So having that conversation with Ana, reviewing that mortgage coach, submitting the documents that she needs to be able to create mortgage coach for you. So I would say on average 3 to 4 days, but Ana, I believe that you can create one in what, 2 days if needed, or a day?
Yeah, I mean, it depends. Let's say you're looking at a house and you want to get pre-approved, by the next day or that day. If you send me all the paperwork, I can make it happen. I'm here whenever you guys need me. So
Yeah.
it can happen as soon as, a couple hours, but typically it's probably going to be about a few days, just because it takes time to get in the paperwork and all that.
Yep. So getting that done is definitely the first step before going out and actually shopping for homes with me. So again, this can take 1 week. We can submit an offer on a home if you're comfortable doing that. The first weekend that we go shopping, it's absolutely been done before. Or maybe you're looking to kind of spread this out over 2 months. And I know that a lot of you have, travel a lot, or are either going to weddings, have your own wedding happening. So life gets really busy. I totally get it. So just make sure that when you're kind of looking at the calendar, how many weekends or weekdays, but for the most part, it's weekends. How many weekends can you really commit to going out and seeing these homes? And what type of decision maker are you? Is it going to take you a bit, or do you really feel ready for this? So this could happen. Shopping and making an offer could be between a week or 2 months or longer. Once we then make that offer and the offer is accepted by the seller, so exciting, you are now in that under contract period. And this can range from about 14 to 30 days, maybe a little bit longer, but I would say on average, our goal is to be about 21 days. And during this time, a lot is going on. Your loan is processing. We're able to get inspections done on the home. And if there's anything wrong with it, you have the ability to back out, things like that. So there's a lot that happens in this time frame, but this is the reminder that once you have found a home and you're under contract, this is still an additional month essentially that you need to work into your timeline that you're not able to move in yet. And it's not a done deal until we are officially closed at the end of that. So the final day of being under contract is closing day, is key day. That's when I actually meet you at the home, hand over your keys, and then you can start moving in. But so with this entire process, giving yourself about 2 to 3 months from the start is the reality of this time frame. And I don't want you guys to feel rushed into this. This is something that I think should take some time. As you're shopping, your criteria might change a little bit, saying, oh, actually, I don't really like this area, or maybe I do need to go find some more money to get what I'm looking for, that type of thing. So it should be this evolving process. And I want, you to have the time to do that. So I've put in some examples of if your target move-in date is April, we should really start shopping this month together. If your target move-in is more so the summertime, starting in April is a really good idea. And then, October and July. So again, it's that 3-month range, but of course we could get you in quicker, or of course the process can take longer, and it's all good either way. And building in additional time to this timeline for any like renovations that you want done on the home. And for the most part, I feel like there's always a couple minor things that my buyers want to do, whether it's painting, whether it's, getting new appliances in, that type of thing. You might want to get those done. You can't do anything before we close, but maybe there's a month or so between closing and when you are physically moving in that you're going to want time to be able to spruce up the space. So thinking about that, and also when your lease ends with your rental, is something to consider. But wanted to also remind you that getting out of your lease is not as hard as it may seem. Just have the conversation with your landlord and say, hey, if we wanted to end our lease early, what does that look like? It may only be, a $200, $300 payment, something like that, when in the grand scheme of, the shopping and the fact that this is, you're buying a home, it's a lot more smaller than that. And Ana, I think if you want to share a little bit of your experience, Ana bought her first home last year, and I believe that you got out of your lease early.
Yeah, no. So we were thinking we were going to wait the full year until to end our lease, but we ended up just going to a couple of open houses, and we found our dream home, and I pre-approved us that night. And, we did have to pay maybe like $500 to get out of our lease, but like I would do that 100 times over, because we're so happy in our home, and it's such a good feeling,
Absolutely. So so this is my reminder. So again, everyone on this call is in different phases of the process. If we haven't had a buyer consult, or just even you can have a consult with Ana before you start the formal pre-approval process. That's how both of us typically start, is, getting on a video call with you guys, or even I meet for coffee, whatever, just to kind of warm up, answer your questions, start to figure out your scenario. But then definitely getting that next step of pre-approval is when you essentially start this real process.
Perfect. Yeah, just want to emphasize the importance of getting that pre-approval done, because people sometimes have no idea what's on their credit score, and you'll find something's really affecting your ability to purchase. So if we're able to clean up your whole application beforehand, before you start shopping, then now you want to buy in this range because you've seen the mortgage coach, you've done the coaching, you know what your credit score is, you know what your payment will be. So it's really important to get that pre-approval done before you do start shopping.
Yes. The more confidence that you can equip yourself before you are actually ready to, again, write that offer and make that commitment, that's when this is going to be a more fun and enjoyable process for both you and us. So who doesn't want that? So any questions you guys have, feel free to type them in. Again, I know that it's, 6:30 at night. I don't want to take up more time than necessary. Again, feel free to either just unmute yourself or type something in the chat. But Ana, any final first-time home buyer advice, thoughts from doing it yourself or just working with a bunch of clients?
Advice. Let's see. I mean, we just purchased a home this past 2022. I know, Cindy, you were looking to purchase a home. So we're not just saying this because it's our job and we need to buy. Now is actually a good time to buy. And it's such a good feeling. If I can do it, if Cindy's about to do it, then you can definitely do it. Just definitely take some planning and talk to Cindy, talk to me, and we can get you all squared away. And hopefully 2023 is your year to purchase your first home.
Absolutely. Yeah. And also knowing that, being a first-time home buyer, your life still may be in that fluctuating mode where your life may look a lot different in the next 10 years. And I've seen people, it doesn't mean that you have to buy a home that matches that 10-year picture for yourself. Of course, we don't even know what that's going to look like, but I've seen people still invest in real estate and, use their property as a rental while they do upsize for themselves or anything. I did see a question come in. Namib, thank you for asking that. Have either of you worked with military? How was the process working with them and their VA loan? Ana, I will let you answer that.
Yeah, actually, my fiance is a veteran, so we did use that VA loan. It's the best loan out there. Don't get discouraged by it. It's really great. The one thing you do want to consider is if you're trying to get a condo, you want to make sure that the condo is VA approved, which Cindy and I can help you do that. But that's the only limitation there. Sometimes the condo complexes are not VA approved, so you'd have to apply for approval, which might take a little bit longer. But besides that, the VA loan is amazing. You save hundreds of thousands of dollars. You can put 0% down. If you have a disability, they waive the funding fee. There's just too many great things to say about that loan. So I'd love to answer any questions you have offline.
Yeah, absolutely. I had two of my buyers last year were both VA. And yes, that is something when we're looking for townhomes and condos. But I will say with the experience of shopping with them, most of the condos were VA approved. And I know in other cities, people have been like, is the VA loan, do sellers see it as a downside? I'm going to say no. In San Diego, because we have such a military presence, nobody is really like, realtors know how to tell sellers that there's nothing different about this. Essentially, it's not seen as a downside that you're purchasing a home with a VA loan, at least from my experience and what I've seen. Again, San Diego has that big military presence, whereas I've heard that other cities, it might be like, oh, what is this? Is this like a government thing? I don't know. Maybe this is going to take longer. I don't want to pick this buyer. That hasn't been my experience here in San Diego. You're welcome. Any other questions before we wrap up? Yeah, I was just talking about just because your lifestyle is going to be changing in the next couple of years doesn't mean necessarily that your home has to match that perfectly. I've seen people either sell and take advantage of the equity that they've made, or they're able to turn it into a rental. And that's a fantastic way to continue building wealth with your real estate and just having options for yourself. So again, that graph that I first showed when we hopped on, like that is what I always go back to say, this is a healthy investment, a safe investment, and you need a roof over your head, right? Like this is something that you need regardless. Yes, I'll definitely make sure Namib gets your info so you guys can chat on that.
Perfect.
Alrighty. Well, thank you all so much for joining. We really appreciate you taking your time out of this weekday hump day to join us and to chat. Ana and I are always available for your questions and to have a more tailored one-to-one conversation on any of these topics. But we hope that this was helpful in just as you guys think about getting ready to buy a home, hopefully this year. We'd love to work with you. And yeah, that's all I've got.
Perfect. Thank you so much, Cindy. And thank you everyone for attending.
All right. Have a good evening, everyone.
Bye, everyone.
Bye.